Hello everyone. Today we had our Nifty expiry, and as you know, Nifty jumped up in the end like nothing else, and it was unexpected. Really, it was unexpected. But this was the revenge which was taken by the FIIs against the prop decks. So yesterday we saw that like the prop decks, they have made fresh call writing positions. Okay, but the FIIs were on buyers on both the sides. And today what was happening is during the consolidation, I have also posted it here as well, that is the both the side prices were like the premiums were not decreasing. And when this happens, either on both the sides, it can spike, and as well as like it can hit the stop loss on both the sides, and finally it can end flat. So since both the scenarios were there, and there was no HFT guys that were buying calls or something, so otherwise I would have able to catch it and take the proper take proper positions. But as you know, I did not trade today as well. So why I did not trade? Because the first thing is that if you want to be a seller, premiums are not decreasing. If you want to be a buyer, so yes, on the put side there were like scalping opportunities that were coming. Call side, like the premiums were almost flat. They were not just decreasing, but they were also not increasing. On the put side, yeah, so there was some opportunity for the scalping for the option buyers, but still I avoided, because until unless the call prices they decrease, it's not a good sign that I go into the put side, because again, anytime the call side can also spike, and the put price will just I mean get 50% or maybe less than 50%, it will the premiums will go. So that's why, to avoid all those risks, and as well as I said yesterday, that is consolidation is about to break. So consolidation was happening and that was about to break, so you have to wait for which side it's breaking, and then after that you can go. Now you can go long. I mean, if there's more opportunity, so we'll discuss all those things. And also one more thing I want to discuss, that is on this happened on Bank Nifty Wednesday. So what happened was that this also happens a lot of the times, that is during this candle. Okay, so during this candle the fall came. Okay, this was the biggest fall, I mean yesterday in Bank Nifty 1135 candle. But during that candle what happened was the call prices were just not decreasing. Okay, so even I shorted calls, and I know like what happened yesterday. So first of all, yes, today no trades, and yesterday as you see, during that time, I mean at the exact top we got the put buyers and went with them, and I closed the put buying. But the call writing I was writing, but though the fall came, and the candle was a huge one, but still, I mean, we shorted at 70, and the premiums were not coming below 50. Okay, hardly it was going to 46, and then again it was going above 50, and so on and so forth. So but this does not happen when market is going up. So this is also I have made some detailed post what is happening during these kind of markets, and how things are getting manipulated. So I think I have made I have made a detailed post here, that is this one. Market is not supreme, it's manipulated. And also sometimes it happens because, like, suppose some big guys are call buyers, they went as call buying, but some other big guys went as put buyers, and now the put buyers are winning, but the big call buyers, if they want to exit, so they don't want the premiums to decrease. So that's why the premiums can be managed on the call side as well. So now you would say that how can the premiums be managed? How are the premiums not falling on the call side with a heavy fall in Bank Nifty as well? So what happens is that, I mean, what you can do is, if you have a lot of money, so a lot of money means, like, let's say 1 billion, 2 billion, so whatever. So the thing is that you can go into the call prices, and like these HFT traders, so what they do is, like, they get into it, and so they create artificial buying there. So what they do is, like, they take their bots and they buy and exit. So some artificial type of buying is created there, and that's why, that's how the prices are manipulated. And also like they can also do something like this, that is they can go into the next week on monthly expiry, and they're also like they can initiate some buying, and that will also triggers something like that will also trigger something. I'm not saying that it's directly like it can be influenced, but yes, so these are some of the techniques, but not all. That's how these premiums can be managed. Okay, so but if you see the put side, the put premium went 3x, but the call premiums were not even going half. So it was just down from 70, it was down to only 50. So that's the problem we are facing, and artificially, like sometimes prices are being managed, and yeah. So now talking about the our money flow. So today our money flow like was a positive in the morning, and then again little bit negative, and then it went to the negative, and then before jumping it went to the like neutral zone, and then after that it went to its overbought region as Nifty spiked up. And talking about Bank Nifty also, like if you see here, that is before the spike the score came to the neutral zone, and then and also like the spike, even if you see this is Bank Nifty spike happened in at 2. So if you look at the money flow of Bank Nifty, much before 2 p.m. the scores were positive. Okay, so I mean Bank Nifty money flow gave a nice signal of the up move, more accurate one I would say than Nifty. So yeah, so as you can see, Bank Nifty clearly was going positive, and then after that the spike came. So from a very long time, like let's say half an hour before, so the spike came at, again as we saw, like 2 p.m. So as you can see, half an hour before we were getting the signal in Bank Nifty that Bank Nifty is going to spike up or go up, whatever. So yeah, so that's how money flow can help you. And yeah, now coming down to the EOD data. So EOD data is like long positions have been made by the FIIs in futures, as well as long positions by the prop decks. And talking about here, you will see that most of the positions are closed, like prop decks have made some put writing, but let's look overall. So overall, if you look at here, that is FIIs are put buyers and call buyers as well, but see, call writing is so much less. That means we will consider them as call buyers, and we'll consider them as put writers. The extra put buying is for the hedging of these call futures long positions. Okay, so now talking about the next part, that is prop decks. Prop decks are directly like they are put writers and call buyers, so they are like bullish, and they are also bullish in the futures. And talking about our option chain. So option chain, if you look at, let's say in Sensex, we have like tomorrow we have expiry. So Sensex, if you look at here, that is the put writing has been done at 82,000, and majority of so these type of indices, majority of the positions are made on the expiry day. And also coming down to Monday, mid cap Nifty, if you look at here, that is put side. As you can see now, put side is dominating. And even if you look at Bank Nifty, so Bank Nifty also, as you can see, some nice put OI can be seen rather than on the call side. And talking about Nifty, so Nifty, let's look at the next week. So next week, even if you see here, 25,000 now can act as support, and these call writers are unwinding. And also like going above, we have like 25,500 can give some resistance, and that's what we are looking ahead. So that would be our next resistance zone, 25,500, and our support zone at 25,000. And yeah, so I have discussed everything. So yeah, if my analysis are helping you, so please don't forget to put a like. And again, if you want my live trades or my live analysis during the live market hours, you can be a part of the derivatives indicator group. And yeah, that's it for this video. Thanks for watching, and see you in the next one.